Welcome back to XRP Future Finance. Now, before we get into today's video, I want you to think about something for a second. What if the biggest names in crypto are quietly losing ground to assets that most people still sleep on? Because right now, the latest ETF flow data suggests a notable shift in investor behavior, and the picture it paints is hard to ignore. XRP and HYPE are pulling in fresh capital week after week, while Bitcoin just had one of the worst weekly outflows in its entire ETF history. So if you have been watching this space and wondering whether something is shifting beneath the surface, yeah, something is definitely shifting. And today we are going to break down what may be happening and why investors are paying attention. Let's start with what the data is actually showing us, because this week was not just another week of ETF numbers, it was the kind of week that makes analysts do a double take. There is a clear split forming in how investors are treating different crypto assets through ETF products, and that split has been widening for several weeks now. Bitcoin and Ethereum are on one side, seeing capital walk out the door. XRP and HYPE are on the other side, consistently pulling money in. Solana was briefly in the winner's camp last week, but just flipped back to red. That kind of divergence in a market this size does not happen randomly. It reflects real decisions being made by real money managers, and understanding why is where things get genuinely interesting. So let's talk about HYPE first, because what happened on Thursday this week was the kind of single-day performance that turns heads across the entire ETF industry. The HYPE Spot ETF funds brought in just over $108 million in net inflows in a single trading session. One day, $108 million. That was not a gradual buildup, that was a concentrated surge of capital that made Thursday the single best day these funds have ever had since they launched. And it did not come out of nowhere either, because the broader weekly picture for HYPE was already looking solid before Thursday even arrived, which made that spike feel more like the exclamation point on an already strong sentence rather than a random outlier. When you add up the full week for HYPE, Tuesday brought in about 1.46 million and Friday added 1.82 million on top of that Thursday explosion. The total came out to $111.36 million in net inflows for the week, a new all-time weekly record for these funds, surpassing the previous best of $72.38 million that was set during just the second week of their existence. The fact that a relatively new ETF product is already rewriting its own record books this early in its life tells you a lot about the appetite that exists for HYPE exposure right now, among people who are serious about putting capital to work in this space. The streak behind HYPE is just as important as any single week. These ETFs have now posted positive net inflows for 7 consecutive weeks without a single red week interrupting the run. That consistency is something that portfolio managers and institutional allocators pay very close attention to, because sustained inflow streaks in ETF products are one of the clearest indicators of genuine demand rather than speculative activity. When the same product keeps attracting capital week after week, regardless of what the broader market is doing, it stops being a trend and starts being a signal. And right now, HYPE is signaling loudly. Now moving over to XRP, which had a week that was a little quieter than HYPE on the surface, but was actually very meaningful when you understand the context. The XRP Spot ETFs closed the week with $23 million in total net inflows, which marks the strongest weekly performance these funds have put up in about a month and a half. The flows came in across multiple days rather than one big spike. Monday brought in 5.31 million, Wednesday added 2.05 million, and then Friday came through with 15.63 million to close the week on a strong note. Tuesday and Thursday were flat days with no net movement, but that is completely normal and does not take anything away from the overall picture. That Friday surge for XRP is worth pausing on for a second, because end-of-week inflows in ETF products often reflect institutional positioning rather than retail activity. When large allocators want to add exposure going into a weekend, they tend to do it on Fridays, and $15 million hitting the XRP ETFs on a Friday suggests there are serious buyers out there making deliberate decisions about their XRP positioning. That is the kind of under-the-radar detail that most people glaze over when they look at weekly flow summaries, but it can be one of the most telling pieces of information in the whole data set if you know what you are looking at. The cumulative total net flow number for XRP ETFs just hit a fresh all-time high of $1.47 billion. Every time that number reaches a new record, it confirms that the capital coming into XRP ETF products is not rotating in and out, it is accumulating. People are buying and holding through these products rather than trading in and out of them. And that kind of sticky capital may contribute to stronger long-term market interest, although future performance remains uncertain. $1.47 billion does not show up in a relatively new ETF product without genuine conviction behind it. And that conviction appears to be growing rather than cooling off. XRP has also now built up 8 consecutive green weeks, one full week longer than HYPE's streak. 8 straight weeks of positive net inflows is the kind of run that speaks for itself in the ETF world. You do not string together 8 green weeks by accident. That streak means that every single week for the past 2 months, more money came into XRP ETFs than left them. In a market where sentiment can flip overnight and capital is constantly chasing the next opportunity, that kind of sustained consistency from one asset is genuinely rare and worth paying serious attention to, regardless of where you currently sit on XRP as an investment. Now, here is the part of the story that really puts everything else in perspective, because understanding what is happening with Bitcoin and Ethereum ETFs this week is what makes the XRP and HYPE performance so striking by comparison. The Bitcoin spot ETFs saw nearly $1.8 billion in net outflows over the past week. That is not a typo. $1.8 billion leaving Bitcoin ETF products in 7 days, which made it the second worst weekly performance in the entire 2.5-year history of these funds. For an asset class that set records on the way in and drew in billions during its best weeks, seeing that kind of capital leave this quickly is a data point that demands a real conversation about where that money is actually going. Ethereum was not in any better shape this week either. The ETH spot ETF products recorded more than $273 million in net outflows, adding more weight to what has already been a difficult stretch for Ethereum ETF products. Both of the 2 largest crypto assets by market cap are now posting red weeks simultaneously, and that is not something that happens in a vacuum. It reflects a broader shift in how at least some segment of the institutional and retail investor base is thinking about allocating within the crypto ETF universe, and the fact that XRP and HYPE are green at the exact same time those 2 are red is not a coincidence worth dismissing. Solana rounds out the picture this week by slipping back into the red with $3.8 million in net outflows after posting a positive week previously. It is a relatively small outflow compared to what Bitcoin and Ethereum are dealing with, but the direction is what matters here. Solana had a brief moment of standing alongside XRP and HYPE as one of the ETF winners, but this week it joined the losing side of the ledger. Whether that is a one-week blip or the beginning of a more sustained trend is something worth watching closely over the next few weeks, because Solana's ETF momentum has been much less consistent than what XRP and HYPE have been putting up. What makes all of this particularly interesting from a market structure standpoint is how clearly the flow data separates the field right now. You have 8 consecutive green weeks for XRP, 7 for HYPE, a record weekly outflow for Bitcoin, and Ethereum in the red, and all of this is happening at the same time. That is not a picture of a market where everything is moving together. That is a market where real rotation appears to be taking place, where capital is making deliberate choices between assets, and where the old assumption that Bitcoin always leads and everything else follows is being challenged by actual data. The ETF market is young enough that these early flow patterns carry real weight in terms of what they may reveal about evolving investor preference. For anyone who has been following XRP closely, the story unfolding in these ETF numbers is the kind of validation that takes time to build, but means a lot once it arrives. Recent ETF flow trends suggest growing institutional interest in XRP, and 8 weeks of consistent behavior from that capital is hard to frame as anything other than a meaningful trend worth monitoring. The $1.47 billion in cumulative net inflows, the record streak of green weeks, and the Friday surges all point in the same direction, and that direction is one that long-term XRP watchers will find encouraging, even as the broader market picture continues to evolve. If you made it this far into the video, you already know more about what is actually moving the crypto ETF market right now than most people who claim to follow this space. Drop your thoughts in the comments. Do you think XRP and HYPE can keep this streak alive, or is a pullback in the flows coming? If this breakdown gave you something useful, share it with one person who needs to see this data, and make sure you are subscribed so you catch the next one the moment it drops. This is XRP Future Finance. We will see you in the next video.